Welcome to another video. Today we will be speaking about multi-time frame analysis and how to use it in your trading to gain an advantage in the market over other players. Now, we will be taking GBPCHF as an example. We will be making a live market breakdown of it and it will be very educational. Without further ado, let's get in the video. If you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform and I'm a swing trader as well as running an educational company in which I teach my students how to trade my strategies. Let's get straight in the video.
Okay, so let's speak about GBPCHF. Now, as you can clearly see, I have highlighted this zone for all of you, okay? I have highlighted this zone. Now, why did I put this box on the chart? And why did I put it exactly in this way? Okay, it's very important that the box must be exactly like this. Why is it so? So the answer to this is pretty simple. When you're identifying strong areas in the market, you need to see how many bodies are in the zone and how many wicks. By bodies, obviously I mean the colors of the candles, and the wicks are the black sticks you see here. So basically areas that the market rejected. Now, as you can clearly see, in this area you have only resistance here, again resistance, then the market breaks above and closes above the area, goes for a retest, and again we only have the wick, then again another test and it's only the wick, then the market breaks below the area, goes for a retest, and again only a wick, breaks above, goes for a retest, only a wick, and now that the market is coming from below, again is testing it with only a wick. So a simple way to identify if an area is strong in the market or it isn't is to see if there are basically many breaks of it, so many bodies inside of it, and that means that the market is not very interested in the level, or if you only have wicks like in this case, and if the market it basically has a body, it means that the market broke above it, and then on the retest the market will respect it as a support or resistance, depending if the market is coming from above or below. Now, as you can see, the same area that is a structure area is acting both as support or resistance. And what is the concept in the market? The concept is that previous resistance becomes support. So basically the market makes an impulse to the upside, makes a correction, and creates a resistance area. When the market breaks that resistance to the upside, that layer of resistance becomes support. So when the market will go back and retest it, it will act as support. And the same thing is valid for a push to the downside. The market makes a push to the downside, makes a retracement, and creates an area of support. And then when the market breaks that support to the downside and goes for a retest, that area becomes resistance. This is a very important concept in the market, and is the reason for which here with this horizontal structure level, the market multiple times acted and respected this area as support or resistance, depending if it was coming from above or below. Now let's go down on the weekly time frame and see what kind of price action we're getting on the weekly time frame of GBPCHF. So it's pretty clear that from a weekly perspective, the market made a very strong impulse to the downside, then made a retracement, another push to the downside, and then made a push to the upside. So basically, as you can see, we had a clear W formation. Now once the market makes a W formation, you expect a push to the neckline of the W. Now in this particular case, where will be the neckline of the W formation? So the market started above here, went down, up, down, up. So you can clearly see that the neckline is around this area here. Calling it a neckline is just another way to say that this is previous resistance. As you can see, the market respected it as resistance and it's now turned support. So we expect the market to go for a retest of this previous resistance that is now turned support. So we can put a horizontal ray on it, and this will be our target area for GBPCHF. Now, if you extend the target area that we just found to the left, you can clearly see that is a target that makes a lot of sense, because also in the past it was acting as a structure level. You can see that the market was respecting it as support here and then resistance here. So it's a target that makes a lot of sense for GBPCHF. So overall, we expect the market to make this push to the downside for the completion of the W formation. Now what happens if we go down on the daily time frame? Now on the daily time frame, you clearly see that after this impulse from this low to this high, the market entered a consolidation phase, and it's clearly basically showing exhaustion. So we can expect this push to the downside. Now the problems up to now, from the monthly we are bearish, from the weekly we are bearish, and from the daily we can expect continuation to the downside. So the problems start on the 4-hour time frame, and the 4-hour time frame is the time frame that you know that you're supposed to use for entry, because as you know, the monthly, weekly, and daily are for direction in the market, and then the 4 hours time frame is for entry if you're a swing trader. These are the best time frames to trade. Basically, you take your direction by looking at the monthly, weekly, and daily, and what kind of patterns and price action the market is showing, and then you go on the 4 hours to perfect your entry and to find an entry with a good risk to reward and probabilities. But at the moment, on the 4-hour time frame, the market is still in a bullish environment, and also from a structural perspective, the market is still bullish. So basically it's creating higher highs and higher lows. So at the moment, there is nothing that gives us the possibility to be looking for shorts. So basically what we will be doing with the students, and obviously the entry is reserved to them and they know the strategy, they know what they need to be looking for. But at the moment, we will be monitoring price action on the 4-hour time frame with the students for this potential push to the downside. But on the 4-hour time frame, there is a lot of development that needs to come from this pair before we can be looking for a valid entry, because we still need to see the environment shift from a bullish environment to a bearish environment, and we also need to see one of our valid entries before we can take the trade, because as we said many times, trading is reactive and not predictive. You always need to see all the rules of your strategy to be satisfied before you can be looking for an entry. And at the moment, there is a lot of movements that the market needs to be doing on the 4-hour time frame before we can start considering a potential entry that is in agreement with our rules, especially because the market at the moment broke also this counter trend line on the daily time frame. So this is very important. I wanted to show you the thought process from the monthly to the 4-hour time frame when you're analyzing the market. So you take your direction from monthly, weekly, daily, and then on the 4 hours you look for entry. And if the 4 hours is not showing a valid entry, then you cannot take the trade, because the market could easily just continue the push to the upside. You need to wait on the 4-hour time frame. Even if you already have all your data from the monthly, weekly, and daily, you need to wait on the 4-hour time frame for a potential valid entry that basically agrees with all the rules of your strategy.
If you enjoyed the video, make sure you smash that like button. It really does support the creation of more free analysis for all of you, as well as letting me know in the comments below, in the comment section below, if it was helpful and if you will start implementing this kind of analysis in your own trading. Now, if you still haven't, make sure you go check out the mentorship program, in which I teach all of you exactly how to trade my own strategies. Now, there are two ways to go for trading. You can either learn from yourself basically and try to develop a strategy of your own, or there is the easy way and basically learn a strategy that is already proven from somebody that is already trading it and teaching it, like myself. So that really depends on what kind of road you want to actually be on. But if you want to learn my strategies, I really suggest you go check it out, and I will see you in the next video.